Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q3 and 9 months FY26 post-earnings conference call of Macpower CNC Machines Limited. Today on the call from the management team we have with us Mr. Rupesh Mehta, Chairman and Managing Director, Mr. Vishal Mehta, Chief Financial Officer, and Mr. Kishore Kikani, Company Secretary. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the period ended December 2025, the growth perspective and vision for the coming years, post which we will open the floor for Q&A. Over to the management team.
Thank you very much, Vinay bhai. First of all, good afternoon, everyone. First of all, I earnestly welcome you all to Q3 FY26 post-result conference call. We appreciate that you have taken out time from your busy schedule to attend this call. Thank you for being in this call. The financial results and presentation have been posted on the company's website and hope you have had an opportunity to go through the same. I would quickly run you through the Q3 FY26 result highlights first, then we will discuss more about our business. So in Q3 FY26, the company delivered its highest ever quarterly performance in history of Macpower in terms of the EBITDA, in terms of the PAT, in terms of the revenue. So I would like to give you some figures. Revenue stand at 86.15, which is grown YOY at 43%. EBITDA stand at 15.58 CR, which is grown YOY at 99%, with EBITDA margin of 18.8%. That is also a highest ever. And PAT stand at rupees 9.79 crore, which is grown YOY 190%, with PAT margin of 11.37%. This quarter, this 9 month, our capex is also at increase by 12.41 compared to last 9 months 7.81 CR. So that's why our depreciation is also increased by 1 crore. Then also we achieved a good PAT. Machine average price is also increased. Last increase from 18.28 to nearly 20 lakh rupees YOY. Nexa, which we had discussed so many times in 2-3 con calls, that we are focusing on Nexa product. So I think I'm happy to announce that the contribution of Nexa product is also a 39% in our order book, because we are focusing on those Nexa product area. Strong order book, pending order book is also increased by 375 crore compared to Q3. It's now 17% growth in the order book also. Domestic bid is also submitted by 639, and tender bids, defense and aeronautic bid is 319. So total bidding is 958. So in Q4, we are expecting more strong order book and more delivery. We developed a few new product also in our product basket. The name is DCM 4222. That is the double column series machines. Its weight of this machine is approximately 30 ton, and the value is approximately 2 crore. Ton mill center with Y-axis. This one is our new model, nearly 1 crore market value product. And one product is GX100 Super. These 3 new products in this quarter we recently developed according to the market need. And as part of ongoing capacity enhancement strategy, the company has recently taken the 10,000 square feet industrial shed space on rental base, so we can not stop our growth journey for coming 1 year or 2 years. And secondly, we are looking and discussing for another 50,000 to 1 lakh square feet rental base new sets to increase our production, our process, and we are shifting some of the process in this new ready available rental based set. So once we start the new plant, we don't have to suffer for next financial year. Update about our new land. We have already paid a primary token advance amount, and all the government side, almost 18 type of the different approvals we received, and now everything is clear. We have to just sign the agreement with the government, but we are waiting for the government new policy, which is maybe in this Gujarat budget or maybe in February end. So maybe I'm hopefully expect that in March, first week, second week, we received our new land for the new project. And significantly, we increase our export business also. As you know that we participate in the EMO exhibition in Germany, and from this exhibition, we received the few orders from the few dealers we appointed, and gradually now we are entering into the export market also. This is a brief about the business and performance, and I request Vinayji to start the question and answer.
Thank you, sir. We'll now begin the question and answer session. All those who wish to ask a question, please use the option of raise hand. You can also put your question in the chat box. We'll wait for a moment till the question queue assembles. We'll take the first question from Arnav Sahuja. Please go ahead.
Hi, Rupeshji. Congratulations on a strong set of numbers.
Thank you very much, Arnavji.
So my first question is just with regarding this land rental area that you just spoke about. So this is different from the land that you are acquiring, which you are in the process of, deciding with the government how much land they'll give and those various terms. And that land, correct me if I'm wrong, will have a 10,000 machine capacity over the next 5 years. So what will the purpose of this rental area of 50,000 to 100,000 square foot be for?
This new land for rental, we are just discussing because it is readily available with the very nominal rental base. So in 26-27 financial year, if we receive the land on March, then also minimum 12 months, 1 year, we have to wait for the infrastructure, plant and machinery, and expansion of the capacity. So meanwhile, for 26-27, this land is available for short period. So we are deciding that if we utilize this land, then we can smoothen our production and production capacity also. We can, I think, improve.
So if we get this land, the 50,000 to 100,000 square foot rental area, then we will still go ahead with the new land that we're trying to get for the 10,000 machines, or then we'll just use this existing space for that capex?
No, this new 50,000 to 1 lakh, already we shifted 10,000 square feet area. Some of the process we are shifting in this new 50,000 to 1 lakh, because what we feel that if we want to achieve 2,500 machines capacity, we need to shift some of the process. So we are planning to shift some of the process in this new rental area for a short period, maybe 1 year or 1.5 years. After new building, new construction of new plant will be in operation, we'll shift this rental area and will be totally focused on the new plant and new building, where we are keeping another 2,500 machine for phase 1. Yeah.
So this will just be temporary and it won't be an additional capacity enhancement. It will be the same capacity moving to that area.
same capacity, but we have to struggle to achieve this 2,500 capacity because of the shortage of the areas. So we decided as a safer side, it is not that much costly also. So we'll shift some of the process to smoothen the 2,500 capacity for next financial year.
Okay, understood. And my next question is, so last year in quarter three FY25, we you spoke about some bank realization issue and payments regarding those issues, which affected the performance a bit. So, did we face any similar bank realization issues this quarter, or was that a one-time thing?
No, I think now we have some kind of the financial scheme also available with some of the NBC, and that is why our payment and financial realization issue is almost sold out. So that's why we make the one good strategy also with some NBFC, and now we don't have that much problem for the realization. So that issue is not, I think, and this quarter three, quarter four are always the highest ever for the every machine tools builder or capital goods manufacturer, and that's why we feel that quarter on quarter also we will achieve the good numbers.
And just one last question. Are we sticking to our guidance for performance in FY27, or is there any revision in the
I
guidance?
think as I discussed, Arnavji, that every year we'll achieve 25 to 30% growth. So same journey we are expecting for next financial year also.
And this is revenue and profit growth.
Everywhere.
Okay. Okay. Congratulations again on the strong
Thank
set
you
of
very much.
numbers.
Thank you.
Thanks for answering my question.
Thank you, Arnav. We'll take the next question from Dhaval Shah. Please go ahead.
Yes. Hi, Rupesh bhai. Congratulations. Good set of
Yeah,
numbers.
thank you very much, Dhaval bhai.
Yes. So, so my question is regarding the various models. We have given a lot of information about the new products in the presentation. Uh, with so, where do we stand in terms of our complete offering to the market? At this stage, how many more products or which other new platform are needed for us to, have a complete set of offering to the customer? Say, for example, if our competitor is having 10 products, so do we have all of those 10 products, or we have reached 8 products and and the other two we are working upon? So my question is from that side.
Yeah, I think about product basket, Dhaval bhai, we all the 6, 7 players are neck to neck. I think I have a 5% plus than some of the company, and some of the model we are not focusing. So I think almost every manufacturer have a 90-95% similar product. So product basket wise, I think I have a proud that we are in top three in India. So then also every quarter we are adding the new product. So product basket wise, we are the 100%. As I told in my last con call also that we are suffering for the plant capacity, and that's why we are not focusing on the certain area like tier one customer. But now we are focusing. Recently, we got good numbers from Kirloskar and Amic Forge or like big companies. So we are focusing on that area. But what we have to do for the next financial year is some of the I think area tier one, tier two customer, we have to separately make the separate team for them, and some of the segments which we are not focusing because of capacity. So we are gradually focusing on this area where our presence is almost negligible because of our plant capacity. But now we are increasing the presence in the segment wise and the area wise also. And that's why, if you can see, last year our Nexa contribution was almost negligible. In this
Okay.
9 months, we increased by 39%. So we are sure that next financial year, according to our capacity, will get the good numbers from the booking and good numbers for the billing also. By maybe 20 to 30%, we are expecting the growth for the next financial year.
Okay, so this Nexa segment is for catering to tier one customer?
No, Nexa is for the higher end products.
Higher end products, yes. Okay, but does it mean that the tier one customers will be more on the higher end side, or your current MSME
No, right,
customer will also buy?
no, right now our regular team is handling the tier one, tier two, but we already appoint the few people, and maybe in new financial year we'll active the tier one, tier two, our new team for the tier one and tier two.
Okay, understood. Second question is on the margins front. You've written about 25% margin vision. So this gap from 18% to 25%, and another 7-8%, this is going to be possible because of backward integration or a mix of more better, higher products and backward integration?
I think it is for the backward integration, and we have a fixed cost. Once your revenue will increase, your margin will definitely increase. If you can see the revenue, once
Yes,
revenue increase, the margin is increased by 1 or 2%.
correct.
So that is the one area, and second area is backward integration, and third area is we are focusing on Nexa product, which is premium product, where our margin level is little bit high compared to other baskets. And third is the defense business, where our focus is slightly more right now, and the margin level is highest ever in defense area.
Okay,
So
okay.
that's why I believe that we can achieve this 25% in coming 2-3 years in new plant.
And propose the new plant. So the current plant, what maximum margins you can do from the current plant?
It depends on the revenue. If your revenue is increased, then definitely your EBITDA margin will increase. And if we are not participating in the big exhibitions or not doing anything else, or we can keep the cost remaining same, then also the margin will increase. So there are the two aspects. If my revenue is increased by 10 crore, then margin definitely EBITDA margin will increase.
Okay, so you are okay. So from here on, every incremental machine you sell, all your costs are there in the P&L, and it is going to directly go to the EBITDA,
EBITDA, yes.
right? Every additional revenue you make will go to EBITDA.
Good EBITDA.
Yeah, with very little bit increase in your cost. Okay.
Right. Yeah.
Okay,
So we
Rupesh.
have a fixed cost. That's why.
Fixed cost is there. Yes.
Yeah,
Yes.
fixed cost.
Okay, Rupesh bhai. Thank you very much. I'll come back in the queue. Yeah.
Thank you, Dhaval. So we'll take a question from the chat. Actually, there are three questions by Hitesh Jain. One of the questions is the timeline for the 25% EBITDA margin guidance. So I think you just, yeah.
After I think fully operation of new plant,
Okay.
we can achieve 25%.
Okay. And what were the number of machines sold in this quarter, in the last quarter?
Number of machines we are not disclosing because of the some of the strategy and competition are watching everything. So number of machine I will not explain.
Okay, sir. And his last question is, what is the capacity utilization expected in the next quarter?
I think next quarter capacity utilization is not for the quarter, but entire year. So we are expecting, I think, in the terms of capacity utilization is the terms of the production. So almost 85% we are expecting capacity utilization.
Okay, sir. Thank you, sir. So we'll take the next question, which is also from chat. It's from Naman Jain. He's asking, if we compare with world's leading CNC machine manufacturers, margins of those companies, can Macpower reach those margin levels? This quarter we reached 18% levels. How much room is left on the margin front?
No, margin will increase gradually. It is not overnight journey, but with the new plant, I had given the clear projection that we are trying to achieve the 25% EBITDA with the new plant capacity and new investment in new backward integration. So we are expecting maximum 25%. After that, I will give you the new guidance. But there are lots of opportunity in this business to increase the margins. We can start the new vertical also. There are lots of, but right now we are focusing on 25% with new plan.
Thank you, sir. His next question is, are we looking for any technological or R&D partnership with world's leading producers to become the top 10 or 20 companies in the world? Is there anything in your agenda?
So it is already in our agenda in Q2 con call meeting. We had discussed about the joint venture or the technology transfer, and some of the product will produce in India with their technology. We already met five company in last Germany exhibitions, and we are almost in the finalization stage, but we are waiting for the new land. Once we receive the new land, I think we'll start with the one company.
Thank you, sir. We'll take the next question from chat. It is from Aniket Jain from Yes Securities. He is asking, what is the impact of trade deals with US and European Union on the CNC market in India?
I think USA, we don't have anything. We are importing from USA or we are exporting from India to USA. But European machines are maybe they can, I think, sell in India, but their price is right now almost doubles. And the tariff in Europe and India is just 7.5%. So it will reduce only 7.5% if the tariff is zero. So it will not give that much impact because their price is almost double without custom duty. So logistic cost is also a significant role to for them also, because logistic cost is also 25 to 30%. So it will not give any impact, but we have a good chance in their country. Our tariff rate in a European market is, I think, too high. So it is a good chance where we are focusing right now. We had supplied the many machine to European market after EMO Germany exhibition. So yes, it is a beneficially to the Indian company.
Thank you, sir. We'll take the next question from Mahek Talati. Please go ahead.
Yeah, hello, sir. Thank you so much for the opportunity. Sir, just wanted to understand. So, when we say 25 to 30% growth from in FY27 and going forward, so is it in volume terms or revenue terms?
Everywhere, I think, for the revenue terms also, and EBITDA terms also, and a PAT term also.
But sir, but then we are also expecting the margins to improve going forward. So our EBITDA and PAT growth should be higher than revenue, correct?
Yeah. It is relevant to your revenue. Once your revenue will increase, your EBITDA margin definitely will increase.
Okay. And sir, what was our average realization in this quarter per machine revenue?
Yeah, I think I had given the figure, Mac. This is the 20 lakh rupees average price compared to last quarter 3, 18.28. So it is increased.
Okay. And Q2, what was in Q2?
Q2 also, I think nearly 20 lakh. So same in a Q2 versus Q3.
Okay, so now since you are focusing on the defense portfolio, so this 20 lakh will increase going forward with the
So
new
I
lakh,
think
right?
gradually we have a huge pending order from defense, and we are going to realize this order on Q3. So definitely Q3 will be average price will be increased.
Okay, understood. Okay, and land will be in Feb and or March first week, correct?
I'm expecting because we have to just sign. Nothing is pending right now. All the approvals is clear, but right now they have a old policy, and they say stop and wait for the short time. We are giving you the new policy, and which is a very, very good and very beneficial to the sectors. So that's why we are waiting.
Understood. Thank you so much.
Thank you. We'll take the next question from Shashikant. Please go ahead.
Good afternoon, sir. Uh, Thank you. Congratulations for good set of numbers.
Thank
And
you.
obviously the numbers is quite stronger this time. And we hope that the company will deliver in future also. So my first question is about the orders that are under evaluations. Around 380 crores, 18 crores tender are under evaluation. When do we see the results flowing in?
I think for the tender business, there is no time frame for them. There is a one rules, as even there is a one rules for jump order that after 90 days they have to pay the some of the fees for tender uploading. So normally they have to complete the tender process in 90 days, but some of the department is not, I think, following this SOP. So maybe it depends on how many tenders, but in almost the trend is quarter 4 is the maximum opening of tender. And right now one HL tender is open of 3.5 crore. So now tender will open quickly in quarter 4. After that, how much tender we win, that is up to the, I think, luck or our background calculations. What price we had supplied, what price some other people are quoting. So according to me, average ratio is 10%.
Okay, overall bid pipeline is around 958 crores. So 10% is kind of conversion ratio for us. Is it right?
Conversion. Yeah.
Yeah. So in 958 crores, 319 crore is from defense segment. Remaining is 639. So where is the major orders coming from? Which sector?
I think everywhere right now they have a huge budget, mainly HVF and recently this uh, engine factory, HAL and BHEL. They are, I think, uploading the maximum tenders.
Currently, I mean, as you mentioned, there are 6, 7 players having similar kind of product portfolios. So, what is the competitive intensity in these biddings from the existing player?
I think average everybody is getting 10 to 12%.
Okay. So, I mean, 10 to 12% kind of.
Some of the small machines or basic machines tender we are not filing because of process and the bank guarantee amount is old, and some of the institute are not that much good for the payment systems. So, and some of the company is not filing the higher end machines like 5 crore, 10 crore, 20 crores. So it is company to company, they are selecting the technicals and then they are filing. So average in terms of the value, in terms of the numbers, they are getting 10 to 12%.
Okay. So what is the on-ground status from emerging industries like aerospace that India is trying to have its pie grown? So how much inquiries we are witnessing from that segment?
I have a very good market survey, I think, about the segments of our machine tools, CNC machine tools. So I think this year we'll close with the exactly figure will come out after this quarter 4, because quarter 4 is highest ever for everyone and especially March. So I think we are expecting 15 to 25% growth in this sector.
Okay, sir. Okay, sir. So are we also looking to participate in, do we have a calendar of any in exhibitions coming where we are trying to, participate in coming time?
We already participated in last Jamnagar exhibition. Now in this 20th, we are participating in Ludhiana. So every month we are participating in the domestic exhibition. After that, one exhibition in Calcutta. So this year our marketing aggression also you can see. That's why our order, because we had a problem for the capacity, not for the market. Till date we are covering only 4.5% market share in terms of the value. So I think still we have a lots of opportunity. Once we increase the capacity, we will focus more and more on other sectors, other tier one, tier two customer. Right now, if we focus more aggressively, then our operating cost will increase and our order book, you can see it's like a double or triple, but we have a problem for the executions. So that's why we are increasing the capacity gradually, and we are increasing our marketing and distributions and new product basket strategy gradually. So we have still lots of room because our market share is just 4% compared to value. So we are participating right now in each and every exhibition.
Okay, sir. As we have seen, we are more, very R&D focused, company launching so many new variants, new models. So, have we added, recently a good team of R&D members, or uh, uh, how is the, total strength of the R&D team, and have you added further
Right,
into the
right now
team?
we have a almost compared to last year, we have a almost two time bigger R&D team, and we don't have that area. We are not feeling that that area is challenging for us because we are in this field since last 27 years. So our team is capable to manufacture any kind of the machines, and some of the import substitute machines we are going to make the one collaboration also in coming next financial year. So right now we are not struggling for the product, I think, or product development. Maybe automation, robotic, it's the upcoming product also that we already produce and supply to our client. So our R&D team is almost two times compared to last year. So we don't have that area. Right now, our challenge is only land. Once we have a land, we'll build up the new setup, and then when we will start and we'll show the more aggression like other players in market.
Okay, sir. So, do we have any, certain kind of internal policy of R&D budget that we are going to spend every year? Is there anything such like that?
No, I think we decided at least 1 or 2%, minimum 1%, maximum 2% is the R&D budget. But for R&D, right now we are not facing that much product. We have a lots of new product is readily available with our basket, but we are not going to launch because if we launch, then we have to face the again same problem for the capacity. And it is like in one machine we have to utilize 1100 components, so we have to modify our machining process, our fabrication process, our product process. So right now we don't have that much capacity and space, so we are not launching this product. Once our new plant will start, we'll keep the product to product assembly area separately. We'll focus on that area. So R&D team is, I think, 1 year ahead than our future requirement.
Okay, sir. Very nice to hear. Thank you, sir. Thanks. That's all from my side. Thank you.
Slowly.
Thank you. Thank you, Shashikant. Sir, we'll take a question from chat from Mr. Abhijit A. He's asking what is the price difference in Nexa order book and non-Nexa order book? Trying to understand the margin difference.
I think average price for the non-Nexa book is 15 lakh to 16 lakh average price, and
Okay.
Nexa product there is a 30 lakh machine also and 1.5 crore machine also.
Mhm. Okay, so his next question is that good order book this quarter after a sluggish growth in the last few quarters. How do we see then order book run rate in the next year, FY27?
I think, as I discussed in my previous con call also, that we'll try to get the minimum 25% order, new orders uh, against executed and the new orders. So we'll increase the 25% order book on each and every quarter on quarter.
Okay, sir. His next question is how much is the contribution from exports and where do we see this number in FY27?
I think recently we supplied few numbers in the Gulf and the European market. So gradually we don't want to start aggressively for the export market. As I told you, we are facing the problem of capacity. So gradually in a trial base, we are focusing on the few country. But with the new plant, we'll set up the separate export division also in manufacturing. Right now, market is not that much problem for us. Our problem is execution. So in gradually we increase our export market share once we establish the capacity.
Okay, sir. He's asking that are the margins better in export, and if yes, how much?
Margin is better in the terms of 5 to 7% because of some of the incentive from the government also and pricing also.
And his last question is how much can the average realization increase in FY27 considering higher contribution from Nexa?
I think it is not important, I think, for the average realization because right now we are working with the same plant with all the mixed product basket. So say for example, if I manufacture 20 lakh one machines and 40 lakh one machines. So the area of the assembly area utilization, so 40 lakh rupees machine take 2 days and 20 lakh rupees machine take 1 day. So the average realization will, I think, effective ones will shifted into the new plant. But right now, average realization I expecting in next financial year that will increase by 10 to 20% in focusing on more high valued machines.
Okay, sir. And he's asking one last question. Sir, you mentioned our R&D is 2 times of last year. So will this lead to an increase in the employee expense and other expenses in the coming quarters?
No, I think it will not increase that much. We gradually increase the double team compared to last financial year to this financial year. And we are upgrading the team. It is not that much higher valued cost, but compared to last year, we increased the R&D team. That's why our revenue and new models are coming quickly. But it is not that much compared to our entire salary cost. It's negligible cost.
Thank you, sir. All those who wish to ask a question, please use the option of raise hand. Sir, we'll take a question from chat from Naman Jain. He's asking, since you are making import substitution product, so how much percent of import you think can come down in terms of percentage in the next 5 years? Any PLI scheme government is planning for this sector?
I think it depends on the government policy. I think it is too early to predict how much percentage we can reduce. But yes, we can increase our percentage. That I am sure that this sector will grow by 20 to 30% YOY every coming 5 years. Because still we have a lots of room. We are not exporting. India's export is less than 1%, and world market is open for India. And India's companies are ready to serve the world market right now. But same as I told you that they are busy with the domestic order book. That's why nobody is that much focused on export market except 2, 3 companies. So I think we cannot reduce the import. It depends on government policy. But with the joint venture, technology transfer, and acquisition of some of the company in Europe and other country, we can increase our market share. But to reduce the market share is, I think, difficult. In terms of the numbers, we are highest, but in the import machines are coming with the higher price. The average price of import machine is more than 1 crore. So I think India has to focus on that segment, but in coming 5 years, definitely we'll achieve that area where right now what I'm feeling that 45 to 50% is import and 45 to 50% India is 55 to 50% India is producing. So if you can see the 10 years back story, the import was 60 to 65%, and gradually we, I think, reduced the import product. Right now, we are focusing on double column. India is focusing on double column. We are also 5-axis and HMC. I already purchased in 2012, I purchased from Hyundai Korea. Same machine now we are selling to India. I purchased lots of double column machine from the Taiwan and Japan. Now we are manufacturing same kind of the machine. So India is developing a new product basket, which is import substitute. That's why this segment is growing by 50 to 25%, which is the highest in the manufacturing industry.
Thank you, sir. Sir, we'll take a question from chat. It's from Ayush. He's asking, is it safe to assume a 25% growth in revenue for FY27 and FY28 and EBITDA margins to sustain at 18% or even higher based on the contribution from Nexa?
27, I think I'm sure that we can increase the EBITDA margin. And 28, I think EBITDA margin will be also increased once your new plant will. But pre-operating and preliminary expenses cost will be added in new plant. So 28 EBITDA definitely will increase.
And what about revenue, sir? He is asking the revenue growth will be around 25%, we can assume?
No, it is after completion of new plant and fully operated. So I think 29, we can achieve the 25%.
Okay, sir. Okay. We'll take a follow-up question from Abhijit A. He's asking, are we planning to participate in new exhibitions in FY27?
Yes, we are planning, as I just now discussed, that in each and every month we are participating in exhibition. After this Ludhiana, we have a Calcutta. After that, we have exhibition in Pune. So every month we are participating. It is ongoing journey and it is the regular process of business.
Thank you, sir.
Last year we don't have a capacities. That's why we are not aggressively participating. In 2023, we not participate in exhibition. 24 we started. Gradually we are increasing, and now aggressively we are participating in all the exhibitions.
Okay, sir. Abhijit is asking, sir, what was the primary factor behind the increase in finance cost this quarter? How do we see the trajectory going forward?
Just each and all. So I think we launched the one scheme for our customers, and we had a one tie-up with the one NBFC. So this is our internal, I think, scheme with the NBFC company, which is helped to realize the financial disbursement immediately. So that is why this cost is increased. But we'll cover with our sales price. So it is indirectly cost, but it is not indirectly cost, directly cost, because our margin is improved and we are, I think, diverting that percentage to the NBFC company.
Okay, sir. So we'll take another question from chat. It's from Keshav Tantri. He's asking, I assume we import the controllers from Fanuc. Any impact on the cost of these components due to European Union trade deal?
Fanuc is not, I think it is in, we are buying with the yen. So it's a yen effect is, I think, applicable for us. And we are buying this Fanuc from Fanuc India. So they are giving us with the Indian rupees only. And the factor is every 4 months we have to see the yen. So right now, Fanuc in last 2 quarters, the yen is decreased. So it is benefit to us.
Okay, sir. We'll take the next question from Ronit Kapoor. Please go ahead.
Yeah. Hi. Thanks for the opportunity. So first of all, congratulations on the great set of numbers.
Thank you very much, Rohit.
Yeah. So I want to know, like, how's the competition you're seeing from this imported machine, this fabricators from China who are bringing in parts and assembling the machine? And secondly, I want to know, like, when is the BIS expected to come to stop this?
I think Rahulji, right now we are not that much, we are not facing that much problem with the China import and their assembly here, because the quality of these kind of machines is just like Chinese toys. So within 1 year, within 6 months, 2 years, so initially 2, 3 years back, people buy these machines who are just as a new entrepreneur, they wanted to start their startup. But after this experience, our machine's life is minimum 5 years, and if the good maintenance and good service they are doing regularly, then they can utilize for 10 years also for the roughing purpose. But these Chinese machines is only 1 year, so I don't think so. It will affect our Indian market, but I think new rules of BRTS is, I think, applicable on next financial year. September, October is the deadline. So maybe after that, almost this kind of the import from other country and from the China will stop. But our import is from China is very, very less in the entry level machines.
No, no, imports are like, I mean, mainly of parts and a lot of these unorganized sector, they are fabricating it and making it, right?
No, but unorganized sector, I think not in this sector, this segment. They have to organize. If they wanted to assemble and they wanted to test the machine, then also they have to establish the full capacity plant. So there are 2, 3 players are just doing this kind of, but they are buying CKD, all the machines. But it
Yeah.
is entry level machines. The cost of that machine is just like 50% than Indian machine, and the capacity is half. Our machine capacity is 2 times than Chinese machine, and reliability is zero. So I think now people realize that we don't have to buy these kind of machines, but the Chinese market share is in total terms of the value is not more than 5% also. So it is not the threat for us, and our threat is to develop the for Macpower, our threat is or our opportunity we are missing is the plant capacity. So next financial year, once we receive the new land, we'll increase our capacity. And the second is the import substitute product. So I am sure that we are fully capable to deliver the import substitute product in coming few years. So China is not a big threat, but yes, October, November. Now this is the last warning from the government for this standard. So after October, November, I think September, third quarter, China machine will stop.
Okay. And lastly, like any update on when you will be finalizing the joint venture, the foreign company?
We had a, I think we have a non-disclosure agreement, but we are ready from the both sides. Slowly with some of the things we'll start once we receive the new land. Meanwhile, we are doing some of the things jointly right now. We are selling their machines. We are focusing that we can give the market survey, and we are working on that area. Once we receive the land, we'll announce the one joint ventures.
So this joint venture capacity would be the new land or like some other
With
capacity also plan?
new land, because they have a certain kind of the criteria. With this plant, if we start the manufacturing of their product, I think we'll disturb our own setup right now. So we'll make the separate setup for them.
So your new foundry is also supposed to come up in the land, right?
Yeah, new land. Yeah.
Okay. And lastly, like in terms of the joint venture, like you'll be having a 50% stake or like
No, it
majority
is
stake
not
will be
like a
yours?
joint venture. It is a word I am using, but it is like a technology transfer and buyback systems. So they are not investing. They want to invest, but I denied them for the investment. So it is a one kind of the business opportunity that we produce the some of the machine for the Asian market in our new plant, and some of the import substitute product they will guide us to produce in our new plant, and we'll give the some kind of percentage royalty to them.
This would be like a contract manufacturing, like somewhat.
No contract.
Okay, just feels like a technology transfer agreement as such.
Only technology transfer.
Okay, thank you. That's it from us.
Thank you.
Thank you, Ronit. Sir, we'll take a question from chat from Zubin C. He's asking, how would you compare the quality of Macpower machines versus other Indian competitors?
I think we all are neck to neck because we have to follow the Indian IS standards. Everybody is following the IS standard. Everybody have a laser, ball bar, NAS test, which are the international norms which we have to follow to deliver the machines. So I think all the top 5 players are following these standards, and I think we all are capable to follow this standard and equal to other top 5 player. Macpower is also in same cube. There is no 1, 2, 3, 4 because everybody have to follow the same standard of quality. So in the terms of quality, yes, we are different in the features. Our length is higher, our speed is higher. In some of the model, we are number one. We are getting the some of the segment market share is almost 30 to 40%. We are very strong in that focus in the some segments. So quality wise, we all are neck to neck. Macpower is also, you can say, number one.
Okay, sir. He further asks that how would you benchmark the quality against Italian or German CNC machines?
I think our machine, Indian machines, is capable to compete them. But what we are manufacturing right now, we are neck to neck. That German and Italian, what they are manufacturing, we don't have that product in India. So what they are manufacturing, we don't manufacture in India. But if you can say HMC, if you can say vertical machining center, we are neck to neck with German and Italy because everybody is following same standard, which all the world is following.
Okay, sir. We'll take the follow-up question from Mahek Talati. Please go ahead.
Yeah, hello, sir. Thank you for the
Hello.
follow-up.
Yeah.
So, you mentioned that you will not be taking any investment from the tech partner. So then how are we planning to fund the capex once the land is transferred to us?
Right now, what the percentage they are asking is too high. We are discussing. So maximum for 5% we offer them. But after that, if we not agree, that will not give more than 5%. But about the new plant fund, we'll borrow some short-term loan. And right now we have some of the reserve fund in our bank also. So this is a temporary short fund we'll utilize. And if our foreign partners is ready, then we'll give the 5%, not more than that.
Okay, understood. And yeah, that's it.
Thank you, Mahek. Anybody who wishes to ask a question, please use the option of raise hand. Sir, since there are no further questions, would you like to give any closing comments?
Okay, thank you very much, Captify, Team Captify, Vinayji and Vinayji's team. And thank you very much to participating. And I promise you that we'll keep this journey for the 27, 28, 29 coming 5 years. We'll give you the significant growth. And with our robust order book, you can see the Q4 also, we will achieve the good numbers more than this. Every quarter on quarter, we'll try to achieve the more and more growth. And thank you very much to joining the control of Macpower Q3. Thank you very much, everyone.
Thank you, sir. We thanks the management team and all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Good luck.